This is Eric Muathe with Muathe.com for December 19th, 2019. Let's take a look at the markets here. Of course, the general market trading pretty much at all-time highs. We can see here S&P 500 trading at fresh all-time highs right here. Now, as the market is doing such a great job of recording new highs, we can see the biotech space has come off its recent lows and over the last 3 months has been coiling high. Now, over the weekend, I was discussing the possibility that as far as the monthly charts are concerned, the big picture, this might be where we see some stalling month to month as far as the biotech space is concerned. The reason why I think that could be a possibility is because the red line happens to be around RSI 61.8. Keep in mind, from a price movement, we've had a nice move from the lows here to the current highs. So I think the biotech space might run into some resistance. Clearly, what the bulls want the market to do is clear this red line area so that it can have a chance of advancing this move. Now, while the general market and the biotech space is doing great, take a look at ABMD. And here we have a totally different look. While the market is trading on the top right corner of the charts here, the stock is trading as close to the bottom right corner of the charts, which is very bearish. And the risk here is if it continues breaking below recent monthly closing lows, that even becomes even more of a sell signal. Right now we are seeing the stock breach the recent monthly closing low from September 2019 at 177.89. So as long as we are seeing this price break, this becomes a sell signal. In other words, this could actually be leadership if this general market and the biotech space rolls over around current levels. In other words, if the general market comes off its highs and starts pulling back, if the BTK starts rolling over on the monthly charts, stocks that were already showing a break are gonna see a massive plunge. And that's the risk, that this could be the new leadership on the way down. Here we can see on the monthly, there's also the risk or continued risk of cracking to fresh monthly lows. Keep in mind, as I always state, be on the lookout for stocks that are crashing through and breaking below the RSI threshold of 38.2, because if they do that, a break below 38.2 for the first time in many years can lead to what will feel like a crash. So be on the lookout here. In other words, the best case scenario for bulls is retaking this level. In other words, prices moving above 177.89. Also, you'd want to see a bounce on this area here, showing double bottom support on the monthly chart, and that might help prices moving higher. That would be the bullish scenario. And of course, the risk here is we continue seeing that the MACDs are trading at multi-year lows. And again, this is pretty much the inverse of the ultimate Muathe breakout method. So here we are seeing stock already moving to fresh lows on the MACD. That's not a good look. Now we take a look at a longer view. We can see the most desirable period clearly from hindsight was this period here. And so we are better off buying the previous momentum breakout so we can avail ourselves to the possibility of higher prices. So buying the breakout there would make more sense because that breakout met the minimum requirements of the ultimate Muathe breakout. As we can see this period here, we have all the minimum requirements of the RSI and MACDs being met. This is Eric Muathe with Muathe.com. As always, good luck, peace, and blessings. ESS.